Well, welcome everybody. Steven Sitkowski here. Glad to have you for my market insights. It is December the 8th. I've kind of dilated pupils. I had an eye exam today. I think I can see well enough to pull this off. We're going to find out. I'm sure as heck going to give it a shot. Yeah, I think we'll be okay. See most of that. A little fuzzy, but we're good. I want you to know that everything that we do here is for educational purposes only, not intended as investment advice. So let's move in the markets. We got the big Fed announcement due out Wednesday. There's about a 90% statistical probability of a rate cut. Um, the big news is going to be what Chairman Powell has to say regarding Fed intentions moving forward. And of course, just his comments on the economy. Where do we sit? How do they view the labor market, GDP growth, etc. Core PCE came in at 2.8%, down from 2.9%. So that was some really good news on the inflation side. Morgan Stanley sees 20% upside for GM. They're sort of recapitalizing some of their divisions. They also think GM is going to be helped by the fact that people are going to be buying less EVs because the tax credit is going away. So they might migrate over to some of their products. 10-year Treasury's been moving up in spite of the fact that the Fed is getting ready to cut. It's now at 4.168, still an attractive level for stock investors. And oil price has been pretty soft, sitting at 58.81. It's been within $2 a share of 60 now for quite a while. So nothing all that earth-shattering there. Market breadth for last week on the New York Stock Exchange. Decliners slightly ahead of advancers, but when we look at new 52-week highs versus lows, still looks great. Now on the NASDAQ, which of course is tech heavy, more advancers than decliners, and 441 new highs to about 300 new lows. So put all that together, still bullish. Last week's heat map, interesting. The defensive sectors, healthcare and utilities, got crushed by and large. I mean, it's pretty much a blanket of red. Looks like technology made out pretty darn well. So people getting a little more aggressive last week. Magnificent Seven to deliver massive earnings. That's the forecast. So for next year, we're expecting the Mag 7 earnings to go up over 20%. When you look at the S&P 500, 13.7%, and you look at everything in the S&P minus the Mag 7, we're at 11.3%. So, when they talk about an AI bubble, don't listen to them. It's where all the money's being made. AI will dominate. I mean, take a look at the percentage of people using various technologies. Almost everybody's using a cell phone or a smartphone and a radio and internet these days. But look at this trajectory for artificial intelligence. So we're up somewhere around 30%, looks like, and growing. I think this is pretty amazing. I've not seen this in my lifetime. When you look at the stocks that make up the S&P 500, right? So that's 500 large cap stocks. The 10 largest of the 500 now represent 41% of the total value of the market. Is that crazy? And 32% of the earnings. And the winners are, we had an interesting blend. Microchip technologies, up over 20%. Dollar General, some of these were earnings driven. Um, NXP Semiconductors, I mean, you can kind of see the list down there, kind of a hodgepodge. If you look over in the right-hand column, you can see where we got tech, staples, discretionary tech, staples, tech, discretionary. Industrial's only one, tech, and staples. Right? Staples and tech, talk about, your basic seesaw. They call it the dumbbell effect. Market sentiment made a nice move. So we have gone from 32% bullish to 44% bullish, from 42% bearish to 30% bearish. People feeling better about things. I mean, the markets are basically at an all-time high. They should. Let's take a look at the charts. Not a lot going on. I don't expect a lot to be going on until after the Fed announcement. See if I've got the SPY. I do. So here's a 6-month chart. That yellow line, that is a 50-day moving average, sloping up, bullish, trading above the 50-day, bullish. We've been above the 50-day for the last 6 months, all but a couple of weeks. It's just been a very steady climb. Sure, there are some pullbacks, right? You see Marco's up, down, up, down, up, down. It's perfectly natural and to be expected. But yeah, I mean, bottom line is we're in pretty good shape with all of that. So not a lot to report this week. Like I said, we don't have any earnings. We're waiting on the Fed. And when the Fed delivers its announcement, plus the chairman does his press conference, we'll have a lot more to talk about at that point. Okay. Well, I hope you have a fantastic week. Until next week, be safe, be blessed, and bye for now.